we got the next management with us. Berger Paints is with us to talk about the decline in oil prices and commodity prices that they are seeing and how this will help their margins going forward. Abhijit Roy is Managing Director and CEO of the company. Abhijit, great to have you with us here. Thank you very much. Just contextualize to us what are you seeing in terms of prices for some of your key raw materials, key inputs in Q2 so far.
So raw material prices, as you said, part of it is linked to oil, and therefore there is a decrease in the prices of some of the raw materials. Q2, you will not see the impact in the margins, so much because there are a lot of stock in the pipeline in terms of finished goods and raw materials, which will probably go right up to September. But the Q3 impact will be much stronger, because of the decreasing prices of raw materials.
Okay, what about, so what will the eventual impact be in terms of demand, in terms of margins? What is the expectation for the rest of the year?
So rest of the year, Sonia, is difficult to predict because it's very volatile. It keeps, sometimes it decreases. Now after 3 months, it might again start going up. But next quarter will be far better. In terms of gross margin, there should be an improvement of about 2.5% possibly.
Abhijit, good morning. Now Berger Paints normally keeps pace with Asian Paints. I'm talking about even the stock price and even the financials and volume growth, etc. But this time you lagged them quite a bit. How come?
So we grew by 54%. There was a little bit of but in the profit growth we were ahead of them. Actually, in terms because we deliberately took the strategy of staying away from putty pricing, which had a negative effect on the overall volume and value growth. So therefore, that was one of the reasons. The second reason was we had a base effect. Last year we had a project which was a very big project in Andhra Pradesh, which is a school project which we had done. And that base was very high in that this particular quarter. So that had an impact on the overall sales growth.
Okay.
Otherwise, we would have probably grown at about 61% had that base not been there.
Got that point. The other issue is about this competition, right? I mean, so far, of course, Asian Paints is there. You are there in terms of the large players, and the others are also there, but perhaps not as big. Now we have some new competition coming up with players having some serious backing, right? Do you see the sector dynamics changing?
Well, competition has always been there. Lots of international players have come in the past. Domestic players, has also come in. JSW has been there for now 3-4 years now. And there are other players who have come in and, then competed in the paint space. There was Kamdhenu at one point of time, JSW now, Birlas are going to step in. So we have to be prepared. We keep doing our job. And we hope that, we do this job well. And competition will be there. It only strengthens our resolve, and we have to innovate and we have to give better services to the customer, better products to the customer. That's what we are supposed to be doing. We have our own strengths in terms of network, in terms of years of brand building, in terms of the contacts with the applicators, the painters, the interior decorators. So that is going to stand us in good stead. We are not overly worried, but any competition also helps you to become more energized. You become more careful in your scheme of things. You don't be complacent. So that's a good thing, actually.
Okay. So, earlier you had given us a target for double-digit volume growth for FY23. Would you stick to that target, Abhijit? And how are demand trends in general?
So yes, I stick to that. We will probably reasonably, unless something happens, in the third or the fourth quarter, which is dramatically different, we should be able to clock a double-digit volume growth. The demand trends, what it was in the first quarter had two, positive impacts. One, of course, was the bases were on the lower side, so we had an advantage there. The second was that there was in general a far higher growth rate, possibly some pent-up demand which had come up in the first quarter. Second quarter, the demand continues at a good pace, but not as strong as it was in the first quarter.
Fair enough. On just to go back to margins, you said the full impact will come through in the third quarter, right?
That's
Not
right.
Q2. Uh,
That is right.
and for the full year margins, which you guided earlier of between 15 and 17%, that's what we should expect?
That's right. That should be there.
Okay, fair enough. Just a quick point on pricing. Q1, of course, was a quarter of meaningful price increases. Q2 has been very minuscule, right? I mean, is there any chance of giving back some of the gains the price hikes that you've taken? Does that happen?
Prashant, it does happen, but it has to be stable, in terms of the lower prices for a long period of time. As you have been seeing, the oil prices keep going up and down. It's very volatile. In the first quarter, rather in the fourth quarter of last year, it was on the lower side. First quarter, it went up. Second quarter, it has gone down a little bit. You don't know what will happen in the third quarter. So unless things stabilize, we can't say that we will pass on the benefit, or is there any benefit at all which is for the long term. So if we see a trend which is stable for a long time, then obviously we will start looking at passing on the benefits to consumers.
Okay. What about capacity expansion? You have a new phase, which is new capacity, which is coming on board by, I think, this month to next month. Any more expansion plans on the annual? If yes, how much are you looking to spend, and what will your eventual capacity be?
So we are one of the biggest capacity build-up is happening in our Lucknow, near Lucknow, the Sandila Industrial Estate. That is going to come up for production from October and November beginning. More or less, it's ready now. In the last minute, final touches are being given, and we are reasonably confident that we should start off in November. That will increase the capacity by about 15,000 metric ton per month at the initial first phase, and can be expanded at a later date. We have purchased one land in West Bengal in the Panagar industrial area. That one also we haven't started yet, because we are waiting for the permission of the environment clearance, etc. So that will probably take another 2.5 years for that plant to come up. That will be primarily be on construction chemicals and industrial resins. And then we are looking at a fresh plant in the east somewhere, and that we'll have to buy the land, and then probably another 2-3 years down the line that plant will come up. So this is the plan as far as factory expansions are concerned.
All right, Abhijit, we'll leave it there today. Thanks a lot for joining us.